This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax.
So, good evening, Bali, and good day, good morning to anyone who may be joining us from another time zone. My name is Darren Joseph, and with me is my colleague, Dicky Damawi, and we are going to talk about taxes for location-independent entrepreneurs, otherwise known as digital nomads. So here's how we're going to do it. I'm going to go through a quick PowerPoint deck. It's not going to take me more than like 15 minutes, just to share certain key principles. And afterwards, we'll jump into Q&A, which I know is super important for you guys because you came with questions. And we looking forward to engaging you on the topics that you have brought to the table. So without further ado, I'm going to share my screen. All right. So I call this one 6 things that you guys should know about taxes. Okay. All right, great. So just to kind of create background, give you a context as to who we are. Dicky and I are part of a regional practice called Moores Rowland Asia Pacific. I sit in Singapore. Dicky sits in Indonesia, and I think Dicky's firm, Moores Rowland Indonesia, is pretty important within the Indonesian landscape. They are the 5th largest accounting firm in Indonesia. So HQ is in Jakarta, which is where Dicky is, but there's a satellite office in Bali. Because of my license, I'm legally required to say that nothing that I say here this evening should be construed as advice. Consider it an education piece. We're going to talk about certain topics in general principles that I hope would assist you guys in engaging with the right tax team to help you, tax team that knows your situation inside out. So I'm a tax professional, we are tax professionals, but we're not your tax professionals. So that's why we can only consider this education. Nothing we say here should be construed as advice, and nothing we say here should be construed as encouraging you to pay less than your fair share of taxes in any jurisdiction in which you are exposed. Right, so takeaways, 6 takeaways. Let's start with the first one, flag theory. I know there are companies that call themselves flag theory, but flag theory, as I understand it, is a principle that speaks to, let's say, lifestyle diversification. It's about not having all your eggs in one basket. So where you are a citizen or where your passport is from, where you're a citizen of, may not necessarily be where you legally reside, may not necessarily be where your company is incorporated. So it's about diversifying your lifestyle. And we can talk about that in a bit more detail if that's of interest later on. But I just think it's a great principle, and it works well, especially for location independent or digital nomads. So I think it's pretty helpful. The next thing I just want to let you guys know about is hashtag fake news. What do I mean by fake news? Unfortunately, and it's, I'm not pointing fingers, it's just the way it is. Information is hard to come by, and that's partly our fault as tax professionals. If you are a fully qualified tax professional with a decent sized practice, basically, I'm just going to be completely honest, the rules kind of prevent you from going online and contributing and sharing information freely. Why? Because you have a license at risk. And if someone gives you less than complete information on themselves and you make a recommendation and it is erroneous, then the recourse is your license can be at risk. Actually, just earlier this week, I got my professional liability insurance premium reminder. So, I pay a healthy sum every year for professional liability. We have an insurance policy in the, I think, 6 or 7 figures. So it is a real risk. So what that means is that in the normal forums, you have less, let's say, less qualified, less busy, or smaller practitioners who may not have behind them the range of expertise. So they just speak to what they know, which would be what they know. And nobody knows everything. So what you find, and sometimes my members of my marketing team, they come back and say, hey, have a look at this. This is what people are saying. And it is scary. It is scary that, you know, that people are making life-changing decisions for themselves, their family, and their businesses based on what's being peddled. And that's no fault. It's just the way the system is. So what I'm basically telling you guys to do is be careful. Be careful, because no one can give advice unless they know your situation inside out and they're qualified to do so. There's a license on the line. Otherwise, you have someone just giving an opinion. Now, there are certain points that I've raised here that we see pretty often in online forums: effective management, Estonia, immigration, and stuff like that. Now, a few of them I will get into later. Otherwise, I'll just leave them for the Q&A. Third point I want to leave with you guys is direct versus indirect taxes. So I think most people are pretty up to speed on the fact that, hey, I run a business. I probably need to be considering direct taxes, i.e. my corporate income tax for my company and my personal income tax for me personally. That's something somewhere in the back of your mind, you know, that it needs to be handled, right? But indirect taxes flies completely under the radar, you know, and for many jurisdictions right now, that is getting special attention. So whether it's VAT or GST in Singapore or sales and use taxes in the US, they're indirect taxes where you as a business owner are responsible for collecting taxes from whoever you're selling your service to, whoever it is you're selling your products to, and you collect taxes from them and you remit it to the relevant authority. So it's different from direct taxes, which you pay directly to the authority. There's indirect, where someone acts on behalf of the government and collects taxes and then remits them. So it's something to pay attention to. And if it's of interest, we can have a conversation about that in the Q&A as well. Place of effective management. So this is so commonly misunderstood. The idea to walk away with is that just by incorporating a company in a given jurisdiction doesn't mean that the company is only taxable in that other jurisdiction. Why? Because most jurisdictions, most common jurisdictions that you would be familiar with, so you're in Indonesia now, Indonesia, Singapore, Hong Kong, Australia, New Zealand, Malaysia, Philippines, you know, most jurisdictions in your neighborhood operate on that principle. The principle is, we don't care where you incorporate your business. I repeat, they don't care where you incorporate your business. What matters to them is, where do you operate your business? Where is management and controlled? Where's mind and management exercise? And if you incorporate your company in BVI or Dubai or whatever, but you run that company from Bali, you have an Indonesian company. I repeat, if you incorporate your company in another jurisdiction, but you run that company from Indonesia, you have an Indonesian company. The Indonesian tax authority reserves the right to tax it. Similarly in Australia, the ATO in Australia do not care where you incorporate your company. All that matters to them is, where do you run it? If you operate that company from Australia, it is an Australian company. That's the way it works. It's, where's your place of effective management? And that is, you know, that stems from a concept known as nexus, or where you have a physical, or where you have a connection, where you have a business presence, right? And we can talk about that in more detail later on, especially when it comes in the indirect taxes. It's a really hot topic right now for those who are online sellers. Next, I just want to talk about the USA and the idea that when I look at entrepreneurs, I put you in one of three buckets. And people have different ways of categorizing. I'm talking about personal income tax now, right? There are the US exposed persons, which will be the US passport holders, as well as the US green card holders. Then secondly, I have other OECD countries, other advanced economies, so Europeans, uh, ANZAC, so Canadians, or Kanzuk, so what they call them, right? Canadians, Brits, Australians, New Zealanders, Japanese, uh, as well as Europeans, and then the rest of the world. And the reason why is because of, generally speaking, I know you shouldn't paint with a broad brush, but generally speaking, the tax rules operate differently. So let's start with the US, which is the exception to most rules. The US practices citizenship-based taxation. Now, others do as well, but the principle here is that you cannot escape the US tax net by staying outside of the US. No matter how long you remain outside of the US, you're still subject to US tax and reporting requirements. No matter how long you stay out of the US, you're still subject to US reporting requirements. And the threshold, to be honest with you, the threshold for filing a tax return is really, really low. If you file separately, threshold is $5. So there's a misunderstanding. Oh, it depends on whether you hit the foreign earned income exclusion or not. No, it does not. If you earn more than $5, you need to think, hey, maybe I should be filing a tax return, right? We can speak about the control of foreign companies. Now, the international tax for Americans is counterintuitive in that you would think that the emphasis is on collecting taxes. Actually, it isn't. When you look at the tax code and specifically the penalties for non-compliance, the penalties for not reporting, i.e. the penalties for not providing the relevant information, tend to be more aggressive than penalties for not paying taxes. It's counterintuitive, but I know it's in the wake of the Patriot Act 9/11. There seems to be an implicit assumption that if you're not reporting your foreign bank accounts, if you're not reporting your foreign companies, you're up to something nefarious, and the IRS will come at you pretty aggressively. So, and there's this thing that I can use a nominee, like how some people do in Bali. The US tax code sees right through that. And you can and you do get in trouble for trying to hide behind a nominee. It does not work. The points are you need to pay attention to your banking, report those foreign bank accounts, remember your estimated taxes. Some people, again, depending on which state you were connected with before you left the US, even though you've been living outside of the US for many years, you may also have a state reporting requirement. Now, we can talk about that in detail later on if you have any questions, but Americans, remember, no matter how long you stay outside of the US, you still need to file and pay. And the penalties for not reporting what you're doing tend to be higher than the penalties for not actually paying taxes. Kanzuk. So these jurisdictions have developed some pretty interesting, what we call fallback rules, which in a way are increasingly resembling the Americans. So what do I mean by that? It means that if you're an Aussie and you have not lived in Australia for years and you've been traveling, under certain circumstances, even though you have not been living in Australia for many years, you may still be deemed to be Australian tax resident. And same in Canada, and same with New Zealand, same with the UK. So there are really interesting fallback rules, many of which are based on case law. So they may not be obvious when you look at the actual written tax rules, but when you look at the cases that have been litigated and the cases that have gone before the tax court, you see what the tax authority has been thinking. So, yep. The EU, under certain circumstances, don't think it's clear cut. You need to deliberately register as tax non-resident. And even so, there are fallback rules. And again, there are different European jurisdictions. So yeah, the rules would vary. But the takeaway is, even though you have moved from your European country of origin, please understand the rules, because you may still have a taxable presence. You may still be a tax resident of your European country of origin. Moving on to the rest of the world. The rest of the world are thinking, right, I'm good, I'm free. I don't have a Kanzuk passport. I'm not American. I'm not European. I have nothing to worry about. I can be a perpetual nomad and pay zero taxes. Well, we know that there are many websites peddling that, and they will sell you all sorts of stuff. But what I notice is that many of these influencers, many of them have no license, and they peddle that information. So again, if in the unlikely event that they are wrong, they have no consequences. There are no consequences to their actions. And they give advice from unregulated jurisdictions. They won't go to Singapore and say that. They won't be based in Singapore and talk about paying taxes nowhere. They may go to Malaysia. They won't go to Western Europe and say that. They go to Eastern Europe. They won't go to North America and say that. They'll stay in Mexico, Panama, Central America, South America. So basically less regulated jurisdictions. Maybe that's just a coincidence, or maybe it's a reflection of the fact that it is technically, that could be a dangerous position to take, and you can have varying degrees of problems if you were to try and basically be a perpetual nomad and pay no taxes. Now, what I like to call out are the fact that, yes, people speak about tax rules, but they do not speak about the bank rules. And banks right now, as anybody who's doing business internationally, I shouldn't have to tell you this, even with your Stripe, PayPal, it's so easy to get suspended and, they freeze your account. Basically, international banking is becoming pretty precarious. And the reason why, it's not that they're being mean, but the banks are under increasing pressure, and not just the traditional banks, but the challenger banks as well. And the responsibility that they have is preventing money laundering. How do you prevent money laundering? You need to know where funds come from and how funds are being earned. And, they don't trust invoices. Give anybody 2 minutes in Microsoft Excel to produce an invoice, right? They don't trust financials, because those can be faked as well. What they do feel a measure of comfort with would be tax returns. And they like to see that funds have been taxed somewhere else. So yes, you may have a passport from somewhere else in the world and you're not legally required to pay taxes. But if you are earning money, at some point in time, even if you remit that money back home to your country of origin, at some point in time, that bank will reserve the right to ask, hey, prove to me that you're paying taxes on this. Show me a tax return. Prove to me that this money is clean. And if you cannot do it to their satisfaction, you're going to have a problem. So with that, I think it's pretty clear with the complexity of cross-border taxes. Anybody who claims to be a one-person show and they know everything is probably misleading, because nobody knows everything. You need to be a part of a team. And with that, I am going to stop share, and we're going to go to some Q&A. So please, if you have any questions, don't be shy. There's a chat box below. Just type your questions in the box below, please, and we will answer it to the best of our abilities. Again, not giving advice, but we can have a general discussion around the principles. Now, I want to reserve the right to ask the first question. So, Dickie, how is crypto? Because I've been talking to quite a number of entrepreneurs and investors in Bali recently, including this morning, who are big into crypto. I mean, a lot of people are, crypto and NFTs and stuff like that. What is Indonesia's position on crypto transactions?
They are, so essentially, they are allowing the crypto transactions. Yeah, but the tax office unable to track it
What
down.
about registering a company in Indonesia?
Sorry. Hello.
Sorry, somebody just unmuted themselves. Could you guys please stay muted unless we get into, you have to ask a question. So please mute yourself. Sorry, Dickie, please continue.
Yeah, so tax office in Indonesia is going to say that, okay, you do the self-assessment. If you have the capital gain from selling crypto, then report it and pay the tax. But the tax office until now cannot assess how much the cryptocurrency transaction in Indonesia. So what they can assess is only based on the fund comes to the taxpayer bank account. That's how they're going to assess that.
Okay, so it's basically self-reporting, and Indonesia treats it
Yes.
as an asset rather than a currency. Okay, all right.
Yeah.
We have a question. Chris, over to you. You have a question?
Yes. Can you hear me? Okay. Yeah. So say if someone, this is kind of this must be a really difficult question. But anyway, say if someone has both a Canadian and UK passport, but has spent most of the last most of his adult life in New York City. He currently lives in Bali, but also travels throughout Southeast Asia. He gets paid currently on a contract by a US company into a US bank account. Where would he declare tax residency? Where would he pay tax on that income?
Mm-hmm. Wow. That's an interesting question, but rest assured that that case is not unique. I think many of us, I have more than one situation as well, and many other people do. So it does become tricky at times. Now with Canada, if it is you were at any point in time resident in Canada, upon leaving, you need to register with the CRA, Canada Revenue Agency, that you are no longer tax resident in Canada. With the UK, you need this. If you go to HMRC's website, Her Majesty's Revenue and Customs, there's a statutory residence test. So you want to make sure that you are not tax resident in the UK by going through that test. And it's basically, they ask you a series of questions, because I know that in the scenario like that, one is traveling around a bit. So to make sure that you are not resident in the UK, and that your center of life is not in the UK and your center of life is not in Canada. So then you can strike those off the list, and you'll only be taxed in Canada on Canadian source income. You only tax in the UK on UK source income. Now, if you were resident in the US, then maybe you have a green card, or maybe you're on a special visa or whatever.
It was just a temporary work visa, so there's no green card,
Okay.
no citizenship. Is not resident in the US because of the rules around days spent in the US.
Gotcha.
Okay. And
so then by virtue of, so let's assume that you can, first of all, you can be tax resident in more than one jurisdiction. I file 3 or 4 tax returns for myself every year in different places. So that is possible. So people who say it is not, they're misunderstanding. So, you need to sense check. You need to check HMRC, am I UK tax resident? You need to check the CRA, am I Canada tax resident? And Canada, when you look at recent cases that have gone before the courts in Canada, Canada's position is becoming increasingly aggressive. And they're saying that if you cannot prove that you are resident, you are tax resident somewhere else, then we will tax you. So Canada is one to be, and it sounds from what you've said briefly that maybe you have more connections to Canada than elsewhere. So Canada is the one I'll pay attention to. If you have no visa if you're not physically in the US, then the US would not be one to worry about. But last but not least, and the most obvious one, given that whole thing about effective management, is Indonesia. Dickie, you want to comment on Indonesia?
Yeah. Yeah, the important statement from Darren is you have to prove that you are paying tax somewhere. Otherwise, the tax office where you reside will tax you. Right. Same in Indonesia. How you enter Indonesia? A tourist visa or working visa or investment visa? If you are entering Indonesia in working visa, automatically you will get tax ID, right? MPWP. Then you have to report your income tax return. And yeah, the rest is almost the same now because it is a worldwide. Indonesia adhere to worldwide income.
Yeah, and if it is that in your case that you've been in Indonesia for more than 183 days, and and visa runs don't reset the clock, so chances are you should be consulting with an Indonesian tax professional, because you may actually be tax resident in Indonesia, among other jurisdictions. We're saying probably not the US, not too sure about the UK. So I would kind of like shine a light on Canada, and definitely Indonesia.
Regarding Canada, if I haven't lived in Canada for more than 20 years, is it still like, I don't know if I've ever filed any kind of non-resident thing, but haven't lived there for 20 years. Is it still possible that I could be exposed there?
It's unlikely. It's unlikely if you've never worked in Canada, and 20 years is indeed a long time. But who knows your personal situation? Where's your family? Where are your best friends? Where are your social ties? Even though you have not been in touch inside of Canada, it's unlikely, but it's worth just checking it out. But to Dickie's point, you must be resident somewhere, and I think the most obvious candidate so far is Indonesia, assuming that you spend more than 183 days,
right,
or entered on an investor visa, etc. So
that's helpful. Thanks.
Sure. Any other questions?
Yeah, I've got one. So basically, it's a little more general, probably for people that, based on the digital nomads living in Bali. So is there any kind of more favorable kind of structures than just being a tax resident here, whereby we would be paying tax in Indonesia, but it is just structured in a way that's more favorable for earning income outside of Indonesia? But yeah, I'm no longer wanting to be a tax resident of Australia, so I'm just trying to figure out my best structure in Indonesia, essentially.
Dickie, this may be one for you. And I believe that in the run-up to the passing of the recent omnibus tax law, there was some belief that when the law passes, that expats in Indonesia will be taxed on their local income only. Is that a misunderstanding? What are your thoughts in relation to the question posed?
Yeah, so actually it's not totally 100% like that. Yeah, the message that on the expatriates only pay income, receive source income from Indonesia. So it's not actually 100% correct. So there's a limitation, several limitation, and several, and the limitation include on the I may say on occupation. So there is only 25 professions that can ask for the benefits of the omnibus law. only 25 profession. And the, the time test is only 4 years since you are entering Indonesia. 4 years since you are entering Indonesia. So if you enter Indonesia for the first time in 2006, then this is not applicable for you, because 2006, then the 4 years will only to until 2009, right? 6, 7, 8, 9. So it's not applicable. So if you have stay long in Indonesia, or you have entered Indonesia before 2020, yeah. So the 25 professions, majority is engineering, chemical. Yeah, so it's a very specific profession that the government think will make transfer of knowledge from expatriates to locals. Yeah, other than that, then like I said, Indonesia adhered to worldwide income. So anything you get from overseas and you stay more than 183 days in Indonesia, then you have to pay tax in Indonesia on your worldwide income.
So in terms of your situation with the ATO, it's either one or the other, and generally speaking, both Australia and Indonesia obviously tax on your worldwide income, right? So in terms of something being more tax efficient, given the way the tax laws work, honestly, I don't see it. The way out of it really is to be not tax resident in Australia and not tax resident in Indonesia. But Indonesia and tax efficiency typically don't go hand in hand. Not in the same, you don't get that in the same sentence like you do Singapore and taxes, Malaysia and taxes, Hong Kong and taxes. Indonesia is just one of those jurisdictions that the tax office is pretty aggressive, like Australia. Sorry about that. Does that answer your question, Josh?
Yeah, more or less. Sounds like I'm just screwed. So I guess one other thing, where can I find this list of professions? Is it public?
Yeah, it's public, but currently only in Bahasa. I can show you the screen.
Yep.
The screen, I make a translate. Wait, that's a quick one.
Okay.
Okay, can you see it?
Let me just screenshot. It's just.
Yeah, and the recording will be available on Facebook, on YouTube. It'll be so don't worry, you can always find it. And on htj.tax, I think Hannah typed down in the box below where it'll be available as well. So everything we say here is being recorded, so you can access it afterwards. That's not a problem.
Okay, thank you.
No problem. Yeah. Okay, so back to the questions. Let's see. Aaron.
Yeah, hi. I have a question, and my friend here has a question as well. You mentioned earlier with the no exceptions with the US, and from what I remember from quite a few years ago, I had some friends when they were outside of the US for over 11 months, and they were filing that completely legally and then being exempt from the federal tax within the US. And so if I have a company here in Indonesia and I'm filing taxes here, are both of those going to suffice for being outside of that within the US? Or could you speak into that more?
That's a good question. So on my slide, the first bullet point was FEIE. That stands for the Foreign Earned Income Exclusion. So for you're correct. If you are a lower income earner, then it is possible that all of your earned income can be sheltered from US income taxes. Now, it still needs to be reported but it may not be taxable to the US. So at the moment, so for 2020, the foreign earned income exclusion threshold is $107,600. It moves every year with inflation, but that's where it is right now. So basically, it means that if you qualify for the foreign earned income exclusion and you earn 107 or less, then it will be reported, but no taxes will be due to the US. So yes, you're correct. Now, as to the second part of your question, if you run a company or you have interest in a company outside, that's a whole different situation, to the extent that, remember I mentioned that the US, the IRS, I mean, the US government in general, they're big on information. Like they pay more attention to information than they do to money. Seems weird, and I say that because of the penalties involved. If you have an interest in companies outside of the US and you're not reporting that, the penalties are pretty aggressive. So, and there's certain rules which we categorize as anti-deferral rules. So if the company in Indonesia, for example, is controlled by US shareholders, then there's certain rules around deemed distributions. Actually, Indonesia has those same rules as well. So if you have, so I know it's a common thing. People think, hey, everybody sets up a company in Singapore, and Indonesia went wrong. Absolutely wrong. Absolutely wrong. If you control a company in Singapore from Indonesia, even though you don't take a distribution from it, you're deemed to have done so by Indonesia and they want to tax it. Same from the US. The US created that game. If you have a company, you control a company outside of the US, even though you don't take a distribution from it, and you're just letting money accumulate inside of it. The anti-deferral rules, and there are quite a few. There's the PFIC rules where you have to file an 8621. There's subpart F rules, and most recently the GILTI rules, thanks to President Trump's Tax Cut and Jobs Act. All those rules look for every imaginable loophole where it says, I don't care whether you took a distribution or not, you are deemed to have done so and you will pay taxes on it. So just to answer your question in two parts, yes, there's a foreign earned income exclusion for those who earn at the lower side of the scale, so 107 and less. That will be sheltered. Everything above is fair game as far as US taxes go. So there's that does protect you. It is probably the best benefit available to US exposed persons working outside of the US. But secondly, and perhaps more importantly, is when you run a company that's incorporated outside of the US, there are really special rules that apply, and they are ruthlessly enforced by the IRS. So pay attention. Does that answer your question, sir?
Yes, thank you.
Sure.
Hey, Darren. I'm Aaron's friend sitting next to him.
Hi, Aaron's friend.
So I have two questions. I am an EU citizen, and I have a Kitas, I have a company here in Bali. I wonder, but I'm not really paying taxes now here in Bali. I wonder if I can receive my money in a foreign account in Europe, so not an Indonesian account, and pay Indonesian taxes here.
Vicky?
Can you repeat the question, please?
Yes, so for example, I am receiving money into my European account in euros, but I am simply sending invoices to my clients and declaring my income and tax here in Indonesia. Is it possible?
Very possible.
Yeah, so I don't need to have an Indonesian bank account and receive money into this account.
No need.
Okay.
When you are filing the income tax return, you have to declare your asset, your worldwide asset. So you will declare that bank account in Europe, right?
I guess so, yeah.
Yeah.
Okay. Okay.
Yeah, that's an important point to raise as well, that, you know, what Dickie said, that we know that for the US, for example, those who are US exposed, the emphasis is on reporting what you do overseas. So you need to report those foreign bank accounts. You need to report those foreign companies that you've invested in. You need to report those foreign gifts you've given or received. Indonesia is similar in that there's an asset declaration that forms part of the Indonesian tax return, where you are required to declare all the assets you have overseas as an Indonesian tax resident. And so both on the US and Indonesia side, people, or even with Europe, people, or Australia, people are going to ask me, well, how are they going to find out? Who's going to know? The answer to that question is the exchange of information rules. So quietly in the background, again, why people very myopically think about taxes, there are other international agreements that have been coming into play. If it is your US exposed, there's something called FATCA, which is the Foreign Account Tax Compliance Act. It started being phased in around 2011. So as a result of that, Indonesia is legally obligated to report activities of US exposed persons back to the US. So if you open an account with an Indonesian bank, and even if you do like me, I have more than one passport, so you go in and you show the non-US passport, if that bank officer, there are certain indicias in their internal rules and in the law that Indonesia signed with the US. Even though that person self-identifies as non-American, if the bank officer suspects that that person is US exposed, they need to report them, and they'll be flagged as a recalcitrant account holder, sorry. So even if you self-identify otherwise, you may still be reported. So that's on the FATCA side with the US. If it is that you are maybe exposed to another jurisdiction, you're Singaporean or European or whatever, the rules that apply come under the Automatic Exchange of Information, otherwise known as CRS, or the Common Reporting Standard. So they are legally, British, Australian, Kiwi, okay, right. They may not tell you, but they are legally required to report your account activity back to those jurisdictions. So those exchanges of information, they create checks and balances in the system. So whereas you think, how is Indonesia going to know about my account in Singapore? That's easy. Singapore will tell them. Pretty easy. They probably get the reports now, as in the Indonesian tax office. As to whether they act on it or not, that's another question, because sometimes they aren't the fastest. But chances are they got it, right? So again, with tax authorities, I believe that it's always best to approach them before they approach you.
Okay. So my assets would be the amount of money I hold in my European accounts, because I have multiple accounts. Yeah. Okay. And up until now, I have been paying taxes in my home country, but I'm gonna leave my tax residence in my home country today. So would Indonesia tax me also for the last few months where I've been paying taxes back home, but I also have akitas here?
Vicky, you follow? You got it?
What is the question? Sorry.
Yeah, so up until now, I have been paying taxes in my home country in Europe.
Mm-hmm.
And today I'm going to quit the tax residence in my home country. And I wonder if Indonesia would tax me for the last few months, because I already had the akitas here. If I pay taxes somewhere else.
You enter Indonesia?
I entered Indonesia last year in March, over a year ago.
Okay, then Indonesian tax office can tax you. They found out any income is not reported.
Okay, so we have to pay double taxes then, Indonesia and my home country.
Yeah, unless you can prove that you have paid tax in your home country.
Okay, no problem. I will have that. Okay, and I just had one short question about TransferWise. What's Indonesia's relationship to TransferWise? I heard that people are not allowed to transfer the money out from the Indonesian bank accounts to TransferWise, for example? Is this true? Darren is smiling. Yeah.
Yeah, sorry, I didn't get it. You want transfer to who?
TransferWise, it's like one of those, depending on how you look at it, it's a challenger bank or fintech, an online bank, or some people see it as a money transfer agency, but some people see it as a bank. But it doesn't have like a physical presence, it's an online bank. So I believe she's asking, is there like any regulation around Indonesian tax residents using Indonesian bank accounts or using TransferWise from Indonesia? Are you familiar with that?
And there's no tax regulations. There's no tax regulation regulates that's that's the idea. Yeah.
Right, but they are relatively speaking, in terms of banking, Indonesia is a strict banking jurisdiction. So typically, and correct me if I'm wrong, Dickie, correct me if I'm wrong. Typically, if you're Indonesian tax resident and you're doing whatever you're doing here, to remit money from Indonesia outside, you need permission.
Oh.
Am I correct in saying that, Dickie?
Not actually a permission, but you have to fill in a form. What is the purpose of the transfer?
Mm-hmm.
What are the invoice? Just filling the form. And then if they are curious about this is money laundering or anything else, then the worst thing is they will block your account.
Okay.
But as long as you can provide the supporting documents, and there's no way they cannot, they restrict you to send money. It's your money, right?
Yeah.
Right. So again, so I guess the question may become, and maybe we don't know the answer here, but the thing is that we know that Indonesia's rules around foreign exchange and money leaving the country are pretty strict. Actually, money coming into the country is strict as well. But we know the rules are strict in terms of there's a lot of disclosure. And we say that vis-a-vis, let's say, Singapore, where it's pretty much you can come and go. They don't seem to be bothered too much. And when you have these fintech companies that may circumvent the reporting requirements, the authorities may have a problem with that. So we don't know the answer here, but what we do know is that Indonesia is big into disclosure around movements in and out of the country, and the extent to which TransferWise or anyone else circumvents these rules around full disclosure, then the extent to which the authorities may become uncomfortable. So,
okay. So it's best not to receive money directly in Indonesia, basically, and just pay the taxes here. Okay, thank you so much.
All right, and we have a question in the chat box. Sorry, from someone is asking, I'm new to Indonesia. I'm an expat. I'm reading it for those who are not looking at this on Zoom, so they can't see the question. I'm an expat with a Kitas living in Bali, and I'm a non-resident in my home country, wherever that may be. However, I still submit a tax return to, I guess, your home country each year. I also submit a tax return each year to Indonesia, so a really good person, right? Trying to follow the rules. Okay, that's good. How does my Indonesian employer pay tax without me getting an additional personal tax bill each year from Indonesia? Not sure why I'm paying the additional each year. Could the estimate be adjusted? I'm not sure what he's saying. So you're non-resident in your home country, you're tax resident in Indonesia. You're submitting a return to both jurisdictions. You're not going to be taxed twice on the same income. Why? Because as Dickie mentioned earlier, Indonesia recognizes tax credits. So you'll get a tax credit to the extent you can prove that you paid taxes elsewhere on that money. So you get an offset. So you're not going to be taxed twice. So I'm not clear as to why the Indonesian employer pays tax an additional personal tax bill each year from Indonesia. I'm not sure about that. Maybe you can clarify. If you would want to unmute, you can speak and clarify. Otherwise, you can just type it below, whichever you feel comfortable with. Okay. All right. Okay. In the meantime, let me check on the other platforms to see whether there are any questions. Okay, none there, none there.
I've got one more just follow up, if that's okay. So
yeah.
just on those 25 professions, I'm wondering if Dickie or yourself have any information on how you would actually need to provide like proof of this profession, like what kind of information will they ask for, and then as a secondary question, would they then, so with the territorial tax law, would that then mean that even if the income earned outside of Indonesia was not unrelated to that profession, would you then still not have to pay tax on that? So say if you've got investments elsewhere, but you are a chemical engineer, would you then have to pay tax on your investments outside of Indonesia?
Yeah, so assuming that you are, so if you are entitled and you get approval from the tax office, then you only pay income tax in Indonesia source you get from Indonesia. Okay, for 4 years only. For 4 years only since you enter Indonesia for the first time. Is that answering your question?
Enter Indonesia for the first time or from your first tax return?
Enter Indonesia for the first time.
Even
so this is the tricky one.
Even as a tourist, say as a child, that would count.
Yeah, obviously. So your first question, how they going to assess this? Is that answer your question?
Enter Indonesia for the first time or from your first tax return?
Enter Indonesia for the first time. I'm getting the feedback sound here, Darren.
Yeah, so it was a.
Yeah, I'm checking. Some people were unmuted, so I just muted them just in case. So try again to speak. It should be okay now.
Yeah. Hello.
Yeah, listening.
Yeah. So how to assess the occupations? So there is a requirements that the expatriate has to provide the certifications that they are the profession, certification of the profession, and the manpower department will run through the certification. We'll overview, we'll review, and I think that's how they're going.
So yeah, I would imagine. I mean, Indonesia is known for being very, let's say, bureaucratic in the sense that I don't expect it to be a quick process. You know, you'd need to get the certificates validated, and probably they'll need to be legalized back in the country of origin, and maybe with the you know, just being extreme, with the Indonesian embassy, maybe back in the country of origin where they were issued. So if it's Australia, maybe, because we've seen it for other documents that need to be recognized in Indonesia, they need, because everyone has a printer at home, right? So they can print anything they like. So they want it to be legalized by the issuing jurisdiction, Australia or whatever. And then I'm just throwing in that it could also include the Ministry of Foreign Affairs or the Indonesian embassy in the country of origin as well. So it basically be prepared for a long process, and it's brand new. So, you know, everyone is trying it out for the first time, so don't expect it to be smooth. But, you know, if you want to reach out to, if it is that you have a specific case, then feel free to reach out to Dickie, and maybe you guys could take that journey together and go through the bureaucracy. He can help you pilot yourself through the bureaucracy and figure it out. But it's brand new, so it's unfortunately probably won't be smooth until they figure it out.
Gotcha. Okay. No, good to know. But that would then, yeah, you wouldn't have to pay tax on any investment income earned outside the country, from what I understand. Okay.
Yes,
So,
correct,
and then,
yes.
and then, yeah, just to clarify, so if you've ever been in Indonesia before 2020, you are not eligible.
You eligible, but only for 4 years since you first time arrive in Indonesia. So you are arrived in January 2019, then 4 years will be 2019, 20, 21, and 22.
Okay. We'll look into that more. Cool. Thank you.
Welcome.
Okay, so we have some more questions in the box below. So as an expat in Indonesia with an investor KITAS, but without NPWP, the Indonesian tax number, one has to declare the worldwide income in Indonesia as soon as the stay goes over 183 days. Even if there's no business inside Indonesia, that'll be correct. Once you become, as Dickie was saying, you cross the 183 day, there's a 183 day rule in most countries in that area anyway, in Southeast Asia. So regardless of the visa that brought you into that country, 183 days, you become tax resident. Now, the question is, Dickie, if you cross 183 days, you become tax resident, you want to do the right thing, do you need to get a tax number?
Yeah.
Okay,
Yes.
easy. Yeah, you want to get a tax number, and I know from talking to your talking to our colleagues, Dickie, in the office in Bali, it becomes confusing, right? Because it's not a smooth process to get the tax number, because then they're thinking, well, you're not working here. You know, is it easy or is it tricky?
It's going to be easy. You want to pay tax, they were very welcome. One day. One day finish.
All right, good. All right, scrolling down now. Next question. If I qualify for the foreign exemption, but I have untaxed money from taking out investments in the US, do I not have to pay anything if I'm still, okay, so this is a US tax question. So you qualify for not the exemption, but the foreign income exclusion, but I have untaxed money, investment income. Do I still have to pay something? Okay, so the foreign earned income exclusion means just that. It's for earned income. It's money that's earned while you're outside of the US. So generally speaking, I know there are many ways of slicing and dicing income, but for the purposes of this discussion, let's assume there are two. There's earned income, so you provided a good or service for which you're being compensated. So there's that you've earned that income. And then let's say the rest is unearned income or passive income or investment income. The foreign earned income exclusion applies to earned income, not investment income. So if it is you have invested in stocks, bonds, whatever it may be, crypto, and you get a return on that investment, that return typically is not protected by the umbrella of the foreign earned income exclusion. It'll be taxed as unearned income. So that's that. Next question. If I qualify, okay, it's the same question. Next question under that. Following on from the prior question, my employer didn't pay enough. Oh, this is the one that we were confused about. Okay, so somebody who is filing a tax return outside of Indonesia and inside Indonesia. So my employer didn't pay enough PPH 21. I didn't, Dickie, I guess you know what that is. I think they should have adjusted last year, so there was no tax bill left over. Dickie, you want to comment on that?
Yeah, just wonder how. Okay, the employer will withhold the income tax article 21 on your salary in Indonesia. So they only make calculation withholding income tax based on your salary. So at the end of the year, if you have other income other than your salary and maybe your income in Indonesia or coming from overseas, then you should pay an additional tax for sure.
Okay,
Does
so
that answer your question, Shane?
does that answer your question?
Unless if you're only receiving income from the salary of Indonesian companies, then it should be there's no additional payment of tax at the end of the year. If there is, then something wrong with the employer.
Okay, hopefully that answered the question. We're now at the top of the hour. He says, yes, it does. Thank you, Dickie. So thank you for joining us. You've been a great audience. If you want to reach out to us, Hannah typed our contact details in the chat box below. For those who are watching it on Facebook, you can reach out to us via our Facebook page. Just message the page and someone on the back end will pick it up and get back to you. So thank you for joining us. The video has been recorded and it will be available on Facebook, on YouTube, on whatever our social media may be, or you can just check htj.tax. Have a good evening and we'll see you next time. Bye-bye.
Bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.